A warm hello from Frankfurt. I'm Thomas Kors and I represent today again the Helaba Capital Markets update at the end of the current quarter, which also will turn probably in a review of the end of the first half of the year, with our usual focus on financials and SSA issues in the Euro market. Well, in general, the supply dynamics in our market have remained, unfortunately I should say, rather unchanged. We have seen a lot of increases in SSA issues, senior pref issues, senior non-preferred issues, and not that much, unfortunately, in covered bonds. As a matter of fact, according to the most recent statistics, covered bonds are on target to probably hit the lowest ever annual issuance volume since we track it. Definitely, at least for the current millennium, isn't that so? Matthias. Again, Matthias Mems today here with me, the head of our DCM and syndicate desk. And I'd like to hear his reasoning behind these developments. So,
hi, Thomas. So, a warm welcome also from my side. What we've seen so far in covered bond issuance activity in euro-denominated benchmark is just 45 billion in the first 6 months, 21. And when you compare the data, especially with last year, when also the corona crisis hit not only the market, we are down from 70, and the reason is why we have issued this year 25 less than the same period the year before. And there are several reasons for this development from our perspective. First, overall, Eurozone issuers have easy access to central bank money via the TLTRO program overall. The second reason is that because of the spread tightening of senior preferred and senior non-pref compared to the same period last year, it makes it for banks much more attractive to issue products in this segment than in covered bonds.
So covered bond issuance volumes are likely to keep falling, but what apparently is not falling is the exposure of banks to real estate, or rather I should say the development of prices in real estate. According to a Bloomberg report I read this morning, the UK authorities are at the moment sending out warning signals that the UK is amongst the 5 most bubbly markets in real estate, globally speaking. And the list is actually topped by New Zealand, followed by Canada, then Sweden, Norway, and then the UK. Germany comes a lot lower here in this respect, which is surprising if you look at the development of prices
Absolutely.
here. But all of these, the 5 I mentioned before, are covered bond issue jurisdictions, but they're not in the Eurozone. So shouldn't they issue much more than they do?
So what we have seen also from this jurisdiction are some issuance in euro-denominated covered bond this year. Well, but you're right. Eurozone issuers have had access to central bank money via TLTRO. Also, Bank of Canada, among others, have granted banks cheap funding possibilities. But what is different this year, again, is not only the central bank access, the spread development, for the different financial products, but also in the currency market. So it makes it for issuers, for example, from the Nordics, much more attractive these days to issue in the domestic currency. And what we see is an increasing demand from investors in NOK, in Swedish krona, and other currencies.
Well, it's such a shame that Helaba is not active in these currencies. But at least in the Euro market, there's also a lot of action besides covered bonds. So, I mean, we've seen SSA issues skyrocketing with the next generation EU, for example. And what do you expect for that to continue right now?
Yeah, you mentioned Next Gen EU with the first bond from the program over 20 billion euro this year, which was a dramatic success and which makes the European Union the largest issuer in the SSA Euro segment this year with a market share of 31%. Having said that, we have seen issuance activity 240 billion SSA segment. This is up from 180 billion in the same period before. And the reason for this is the need to refinance the corona crisis, and especially it is the EU which have issued 75 billion so far this year. And what can we expect for the rest of the year? So looking at covered bonds, when we start, I think we will see just 70 billion, which, and you mentioned it before, would make it the lowest figure we have observed in this century. Other segments are much more There are much more traffic. For example, SSAs, we expect 380 billion from 240 now.
One question to that, Mats, if I may interrupt you there for a second.
Of course.
You mentioned already the next generation deals. That's of course a very big elephant in the room, as they say. But in Germany, for example, the lender bonds have normally been sort of the topic of everybody's attention. What's happening there? How do they cope with that sudden competition? Or are there any special developments of note here?
Yeah, first of all, we can say that the trend that ended last year with negative net supply in lender deals has stopped last year, and we have seen a positive net supply so far. But what is different, we have seen two new issues in the green lender segment with Baden-Württemberg and Hesse.
Didn't we have already a greenish deal from NRW?
NRW was the first one and had a long history of issuing green deals.
But that was social, was it? Or?
It was green and
social. I get confused with these ESG terms. What's social, what's green, climate here, climate there. So what's, for example, the Hessen and Baden-Württemberg? They were what category?
Hesse and Baden-Württemberg were green bonds. And when you compare the issuance data for both of that bonds, you can say, great deals. We observed a greenium, means the bond, everything equal, could be issued cheaper than traditional bonds. And what we also observed was a much huger order book. They have both attracted investors they never had on their deals, and the demand for both of their deals were much higher than for traditional lender bonds.
Well, Matthias, I am aware of the fact that the green label, so to speak, attracts apparently a much wider audience, because you get the traditional investors and, of course, the specific green ones. But the greenium, that's a new thing, right? And that doesn't deter the traditional ones?
In the primary market, it's a relative new thing. In the past, we observed that, of course, we have had higher books, but spread of green bonds were on that level that we would also expect for traditional bonds. Here, we have seen a greenium. And what we observed so far in the secondary market is everything equal, a better performance of green, but that has now turned over to the primary market as well.
Okay. Well, I'm sure that would warrant a whole separate discussion, which I hope we will have in the next few weeks or months. The summer is long, so there is time to fill. But time to fill is unfortunately not the issue now. We're at the end of our session. So, Matze, what's your outlook for the remainder of the year?
So, for the remainder of the year, we will see issuance activity that could pick up a little bit. What we hope is so far, especially for the covered bond segment, that despite our not so juicy outlook of 70 billion, hopefully we will see some pre-funding activities by the end of the year, so that I hopefully may be wrong.
And I hope it's going to be in euros, so we get our share of the pie. So,
hopefully.
On that note, thanks very much again from Hellerbar in Frankfurt. My name is Thomas Koss. My guest was again Matthias Merms.
Was
Thank
a pleasure.
you very much. Stay safe and healthy. Bye-bye.
Bye-bye.